Well, we're all worrying why the bank Nifty has lost its leadership so thoroughly. The rating companies, CRISIL and ICRA, probably have an answer. They've actually only announced the final tally of how many companies were upgraded and downgraded in the half year that ended last week, September 30th. Both point out that the lead which upgrades enjoyed over downgrades is declining. CRISIL says number of upgrades were 1.9 times the number of downgrades. 2 years ago, it was 5.52 times. That's actually 1 year ago. ICRA says the number of upgrades is 2x the number of downgrades. Good, but they were almost 3x for FY22 and FY23. But for more color, we are joined by the authors of the report, Jitin Makkar, the head of credit policy at ICRA, and Somashekar Veburi, the senior director, regulatory affairs and operations, and chief criteria officer at CRISIL. Gentlemen, thank you for your time. Somashekar, can you explain? This is a rather big fall in the CRISIL numbers, 5x and now 2x. What's the outlook?
So clearly, we have seen a moderation in the credit ratio compared to the second half of last year. From 2.19 times, there is a moderation of 1.91. Nevertheless, this is something where it is pretty much on the higher side compared to the decadal averages that we have seen. In terms of sheer numbers, 443 upgrades and 232 downgrades. In terms of outlook, also we remain positive in terms of our credit quality outlook. We do expect upgrades to outnumber the downgrades in the remaining part of this fiscal as well. Primarily on account of the fact that the domestic demand continues to hold up, and infrastructure sector is also something which is benefiting from the
no, Somashekar, 1 minute. I take your point that the number of upgrades will be more than the number of downgrades. I mean, it's 2x almost. But will the lead narrow? I mean, will we look at 1.5x in the second half? Is that trend likely?
Difficult to put a number, Lata, whether it will be 1.5, 1.7, 1.8. But yes, I mean, a mild moderation is something that we do anticipate from 1.9.
Yeah, I just want to know if the trend is what we can look at. A similar question to you, Jitin. Yours has come down from 3x to 2x, the number of upgrades. What would your outlook be?
Firstly, we would like to see this as a series of 3 consecutive periods where upgrades are outnumbered downgrades by far. And if you were to contrast this with historical trends, these 3 years, I'm talking about FY24, it's not completed, but I'm still calling it as a complete year. If you look at this 3-year period of period in history, I think if you were to compare it with historical numbers, this is one of the most benign operating environments, which has contributed to these large number of upgrades outnumbering downgrades. Now on the outlook, it's always a mixed picture, and we prefer to go bottom up in the sense that there will be certain sectors which will be winners, and there will be certain sectors which will be losers, and the complete picture, the composite picture, is going to be a net effect of these two. But by and large, on the whole, we expect that these trends to continue for the remainder of this fiscal. That said, there would be certain sectors where the challenges are going to be difficult to circumvent as opposed to others.
Yeah, that of course. But I'm not trying to paint a picture that there is anything dire happening. Clearly, both of you are saying with with some clarity, number of upgrades are going to be more than number of downgrades. In fact, upgrades are growing at a slightly faster pace than downgrades, though they are growing slower than their own previous record. The pace of upgrades and downgrades will come up for you. I think CRISIL has a nice 6-term table of it, and you can see clearly the upgrades are rising, but rising at a slower pace, exactly what ICRA tells us. But Somashekar, is it very great to keep on tom-tomming that it is still only approaching the last 10-year average? Last 10 year was a dismal average. Only the last 2 years was superb, 22 and 23. So approaching the last 10-year average need not necessarily be something we should be terribly proud of.
Yeah, but even if you go back in history, Lata, I mean, what we have seen in CRISIL is by and large roughly about around 80% of the ratings, get reaffirmed. It's only the 20% where you see upgrades and downgrades, and within them, seeing about 12.7% upgrade and 6.65% downgrade rate is what we saw in last fiscal, turning out to 1.91. It is a pretty commendable number. Also, what has happened, is the balance sheet that you see now compared to balance sheets what you saw 5 years back or even 10 years back is a much stronger wicket for the corporate India. About gearing of less than 0.5 times. It is probably the best that we have seen ever, and that is one of the factors which is giving a lot of resilience on the credit quality front. It is also getting reflected when you see in other metrics. For example, in the bank NPA numbers on the corporate side, they are at a historical low. So it's also corroborated by what is happening, in terms of credit profiles elsewhere.
Okay, well, just keep that table that even Somsekhar is referring to. Clearly, the number of upgrades are rising at 12.7%. Downgrades are rising at 6.6%. So you have nothing to worry. But it's just to prove that the best is over. They were growing at only 3% downgrades a year ago. Now they're growing at double that pace. And likewise, upgrades are growing a little more slowly. Exactly the picture which ICRA is also telling us. Okay, now let's come to the sectors. Jitin, where would you place your money in terms of the best sectors? And one that may continue to do well?
See, from a credit perspective, we currently have a positive outlook on banks. We have a positive outlook on NBFCs, infra, and hospitality, of course. So these are the few sectors where we see that the credit quality is going to continue to be the way it has been, and the trend lines are going to continue. Consumption-oriented sectors, we've seen automobile sector and the attendant, the derived demand from automobiles coming for auto components, automobile dealerships. So again, this consumption story, I think, is going to be intact, and it's going to be supporting the upgrade momentum even in the next 6 months is what our view is currently.
Okay. Actually, the areas you point out are exactly what even CRISIL is pointing out. Real estate is among them as a sector that's consistently improving. Infrastructure, both roads and power, are improving. And that's music to our ears, isn't it? Since infra was the biggest culprit in the previous cycle of downgrades. But Somsekhar, there are 2 or 3 red flags that both you and ICRA to some extent point out, the global red flags largely. Today we have the US interest rates running at 4.6, almost 4.7. Do you think that can create some ripples, people exposed to foreign debt, as well export-oriented sectors like textiles?
That's right, Lata. So clearly, the downside pressures are coming from the global environment and companies exposed to the global market. So export-oriented sectors, especially textile, the cotton yarn spinners, diamond polishers are a couple of sectors which are going to be facing a little bit of downward pressure. Also, some of the commodity-linked sectors where the realizations are on a decline, these would also be under pressure, such as agrochemicals and specialty chemicals. So these are some of the sectors where we do see pressures in terms of downgrades kind of building up. Having said that, for these sectors, for a vast majority of the companies, the balance sheet is something which is strong and should provide some degree of an offset to the downside pressure that is there.
Okay. A final question to you, Jitin. You point out mostly both of you agree that domestic sector is doing well, and the worries are coming from the global environment, their slowdown and rate hikes. But you point out about telecom. Are you expecting big defaults or even defaults there?
Not really. I think we currently have a negative outlook on telecom towers, and that's for a very specific reason. That's because of the elongation of the receivable cycle, because of the woes that one of the telecom services company has been facing, which is getting translated into elongated receivables for the telecom tower companies. That said, by and large, the liquidity positions, the liquidity buffers are strong, and we don't foresee that to be a contributor to downgrades in this sector, and defaults would be, I think, a far-fetched scenario at this point in time.
Oh, that's very good to hear. Thank you very much, Jitin Makkar and Somashekar, for delineating the performance of credit rating in the first half ended September 30th. It's good news, actually. The number of ratings, a number of upgrades are double the number of downgrades for both the key rating agencies. And the outlook as well, you may see the lead narrow, but it is still going to be a benign picture. We'll wind up on It's the Economy on that note. Also on the note that the stock market appears to have stopped falling. The first hour support has emerged, and we are seeing the first green tick in terms of the mid-cap index, which anyway never fell much, is beginning to show that first green arrow uptick. Let's see what Chartbusters can make of this. After a break, Chartbusters.